Hey everyone, welcome back to another winning characteristics video with Ray from TraderLion. And today we'll be talking about Net or Cloudflare and going all the way back to its IPO and discussing its winning characteristics that showed over and over again, signifying that it could be a long-term winner. We'll talk through its chart, its fundamentals, and also discuss some recent trades that we had within the run of the stock. And if you want even more examples to basically train your eye to spot the characteristics of future winners, go ahead and check out the model book that we just posted on Amazon. The link will be down below in the description. And basically it goes through both the fundamentals and technicals as well as position management for many model book stocks over the past 3 years. So with that, Ray, I'll hand it over to you and we'll start by discussing the IPO of Net.
Okay, so we will discuss Net from basically day one, things to look for, how to get it on your radar, and cover pretty much it's a really good example to cover a few concepts all in one video. So the first thing is when we take a look at this first bar on Net, which is the first day it trades on the public markets, it traded about 35 million shares. So every time that we see a stock that is trading 35 or such a large, dollar volume is one way to go about it. And then the other way to go about it is just the volume on its initial day. Not every IPO that's listed on the markets has such volume on day one. So that tells you, one, that there's a lot of interest in that particular name, and two, that there are a lot of parties that want to be positioning on day one of such a name. So that is one way to get it on your radar. If you do a scan on the weekends, whatever the case might be, maybe you want to scan for stocks that had such volume, especially in the IPO markets, if your scanner allows you to do that. The other thing is to get it on your radar is that the first week of its IPO, it makes good progress on day 1, 2, 3, 4, and 5. So look for, in this case, I believe it doesn't do the 20% in 1 week, but look for stocks that are up 20% in a week. That's just a good habit to have on the weekends if you want to be in stocks that are winning in the market. So 2 ways to get that on your radar. And the one that would work well is the fact that it had 35 million on day 1. Net in its early stages does fairly typical runs up for a week and a half, and then really caves in, given that there was a little bit of market pressure and it pulled it down through the IPO day 1 low. And there's always that stat out there that about and I might be quoting this wrong, but 85 to 90% of IPOs always undercut the day 1 low, and we get that on Net. So Net's going to be part of that stat. Moving on, I don't see, so one of the first things is when you're trying to position in any name, is you want to get the, some sort of RS, right? Or some sort of, it's when the market's under pressure for it to buck the trend a little bit, which it doesn't do here. Even if it was on your IPO watch list at this point, maybe it fell, out of your radar, and then it sort of bases underneath this 2208 for about 1, 2, 3, 4, 5 months. So there's not much to see here. With the market trending and the stock trading below its highs, it's highly unlikely. So this is basically, it's in the what do they call it, institutional due diligence phase, right? Where institutions are researching, basically building a thesis. Should we accumulate more stock after this particular day? What is the forecasting of that nature? But what we're waiting for is for price volume action to sort of line up so that we could position in the name. In its cycle, from its IPO all the way to the $60 mark, one of the first times that we see it really pop up would be this particular day on huge volume, right? The prior day to this particular volume day as well, we get the characteristic of highest volume since IPO week, right? So if that doesn't get it, if that doesn't get a stock on your radar on this particular day, that's something that you should be looking for in the markets, because you want to go where the volume is, right? You want to, if you want to be in stocks that are seeing, that are crowded or in the odds of the market, but still within the base. It's very early. It's not even right at the 22 mark. So that characteristic, highest since IPO week, that should make your IPO watch list again, right? If it wasn't on your IPO watch list here, right? At that point, you start tracking it and we get big follow through volume through the 1923, which is an intermediate high, and also the 1930, 1940. And then we rally all the way up to the top of this consolidation pattern. So after that, even, I mean, if you didn't anticipate it after this day, which is still very, very early, this is really a clear signal that someone wants a position in this particular name. Yeah, if I'm not mistaken, this day was an offering day, if I remember clearly. For some reason, I believe it is some sort of offering or something that just caused the volume to be relatively high on that particular day. So
Yeah, and
yeah, go ahead.
one thing I'll add about this space is, as Ray said, it had some nice resistance lineup around the 19 area. And looking at the bottom of the space, there's a couple really nice demand bars coming in where the stock faded, but then rallied strongly into the close. You have one right here, as well as right here, which also looks like a oops reversal, if I'm seeing that clearly. So there's a lot of signs at the bottom of the space as it forms some higher lows here. This is the first low. This is the second low. This is the third low. So a little bit of VCP characteristics where from left to right, the stock is coiling and coiling and coiling, getting tight against all the different moving averages. And then, yeah, it just really explodes up on large volume, which is kind of the first time where I would be looking to buy the stock here. But obviously, as we go on, as Ray will talk about, we run into the overall market as well, because you can see this is during the COVID crash, the start of the COVID crash right here. And initially it does show a lot of RS, but eventually, like all stocks pretty much, it did succumb to the market and form a pretty sharp decline all the way back down to 15.
Right. So after that, basically what the stock is doing is, the market goes into correction and we start seeing RS. That's exactly, that's a recipe where step one is we see RS days, right? Especially in that Feb 24 mark, and which we've covered in many, many videos. That's what you want to see. Stocks that want to lead in the markets and want to, get into a trend will always exhibit RS days, and RS is not the same as RSI. We're comparing the performance of the stock relative to the market. That could be the SPX or the NASDAQ, depending on the type of trader that you are. So in this particular area, when the market is in correction, we see a lot of volatility, right? And overall, this is for net itself, stage one type of names and early names that are just listed on the markets do tend to actually act like this and not so tight like net did. So it was very uncharacteristic in net when it's early in its journey to be trading such tight ranges, right? You're going from 17 to 19 and you're consolidating very tightly in a formation. That's a sign of accumulation. When institutions want to accumulate, and we covered this in the UPST video, right? When a stock is in the eyes of the market and institutions want to accumulate stock, it's going to get tight. And that's just how it goes, right? So for the fact that, we get a lot of emotion, and we go up and down and up and down. But the big positive here is, on a relative basis, it's still not that damage when we compare it to the damage of the market. So the other thing that I do notice is, after this day, we see a step up in daily average volume, right? So this step up in daily average volume shows you that there's some sort of there's net accumulation of the stock. And one of the data points that really does show that is the number of funds. So this data is from MarketSmith. Basically, if we take this, so from December to March, of December 2019 to March 2020. So if we put markers on that, so this area all the way to the March of that, we see an increase of 50 funds. And from March to June, we see almost the double of the number, doubling in number of funds that own this. So if I just put a marker on that again, so this is March when we have 185, and then we go all the way down to June. The June area, we have about 328. So the fact that, I mean, we're seeing a step up in daily average volume, and we're also seeing a step up from 185 to 328 in the fund ownership. So this data point is just telling you what the volume is already telling you on the charts, right? So watch for that, especially on young stocks that are being accumulated. We will see a step up in daily average volume, right? So these are pockets of accumulation when institutions, they're basically visible on the charts. The other way is highest volume since IPO, right? And we see that on over here, and then also in this area, and it becomes really obvious later on in its run. Let's discuss about entry tactics a little bit. When the market's in correction, what we're looking to do is we're looking to establish positions in stocks that show RS, right? So this should be one of the stocks, or SE was another one that should be on the top of your list right around this time frame, because these are stocks that are trying to hold up while the market isn't allowing them to move up. So the entry areas that I do see is the fact that it started respecting 20 when the market started turning up, right? Few folks wait for the follow through day, folks, and on the TL side, what we call the bolded pivot level, right? When the bolded pivot is reclaimed, we're looking to get super bullish in the markets. Normally that's 1 to 3 days before we get some sort of follow through day or the official definition of a follow through day. So the fact that it's moving up the right side, it's showing RS, now it's holding that 20 mark. We see a step up in daily average volume. Before the correction, we see a big breakout attempt that is halted by the market decline, right? All those things scream that institutions are in this, and they want a position in this particular stock. So that's really this is the area to be accumulating. Again, it's a little bit rough. There were a few stocks that were better, and if you guys remember, LVGO that we did a video on was right around this area. S-Fly, I assume, was also had an earnings gap right around this area where he gapped up on earnings with the highest volume since IPO. I might be shifting the time frames a little bit, but all those stocks, I mean, SE was another one super tight in this area. There were a slew of stock. DocuSign was another one. So yeah, so there's a lot of RS. So even if this didn't make the top of your list, right? But let's assume in a market where you were looking at this and this started, was on your radar and you started seeing this, then these are the things that should add to your conviction. And these are the things that other stocks showed as well, right? LVGO had exact same step up in daily average volume, and we discussed that for about an hour in that video. So that's the entry area that I see. The other thing that I do want to discuss is the fact that when we get this 2208 and we get right around that 2208 area, and my line might not be perfect, but treat this area as a level of interest, right? It's very normal for price to fluctuate up and down because there's folks that may have bought here or strategies in the markets, where they're looking at this particular level. So it's perfectly normal for us to see turbulence right around that spot. It's never going to be clean where you have 2208 and you have 50 funds waiting for 2208 to be broken and you never look back at it. It's almost never that perfect. So there's some art to it. You have to focus on, supply, demand, participants, information sharing has gotten faster, things of that nature. So that the whole textbook, wait for this 2208, if breaks above 2208, 08, you go by, that sort of robotic approach, those days are gone in the market. So you have to factor that in, use this as a level of interest. That's why price is going up and down and up and down in this area, because there's a lot of folks are looking at this level. There's strategies that will suppress price. There's strategies that will support price. And eventually what we get is some sort of trend that comes out. What you want is you want to catch the trend, not the mess that's created right around that level. So 20 is a spot of entry, right? There's enough evidence right there. If Richard, do you see another
Yeah.
entry area in here that?
Yeah, I'll talk about. I try to make a few trades within kind of this area right here. So the first one I did, I believe I bought right through this level. I was buying DocuSign, Dexcom at a similar time, but I ended up getting stopped out here because it's just a little bit too volatile here. So that one didn't work out, but I was still watching this, keeping on my radar. And what really drew my interest was how it started acting right around this area. So looking back, you can see it started respecting the short-term moving averages, the 21-day moving average, the 23 EMA, and then we really get a nice tight spot right against that moving average, and I bought right on this day right here. And looking back at this little consolidation, I also really like this bar right here where we see a nice shakeout below the lows within this consolidation, and then a nice rally into the close. And then, as I said, it gets super nice and tight, volumes drying up. And the day before this breakout, it was an inside day on very low volume. I'm not sure how well you can see that here, but that was a tell that the sellers had just dried up. And then we just get an explosion through here. And it doesn't just take out the prior day's high, it also took out basically the highs of this entire consolidation. And then we get a nice momentum burst up here. And I think to end this trade, I sold half around this area and then ended up getting pushed out of the rest right on this bar right here for a nice quick gain. But that's how I played this one, a stop loss hit back in this area, but then I waited for another setup and basically got a nice trade out of this in June of 2020.
One of the best things that I do like about this particular spot, again, we talk about the price volume relationship, is the fact that price tightens up, volume for the most part is below average, and then we get big volume coming out of that consolidation. Right. So I don't know the exact terminology that other traders, some traders call it low cheat, right? Minervini low cheat or whatever you want to call it. What I look at is the fact that broke above 30, failed, broke above 30, came back in. Now price is trying to, this is a clear level of interest, right? Price is trying to break above that 30 mark for the first time and it's struggling. So when volume shows up through that 30, right? After a tight consolidation with a dry up, that is a recipe that of a stock that it's still trying after 1, 2, 3, 4 times, right? It's still trying to get through that. And when we see someone stepping up to the plate, which is not you and I, it's basically institutions that are done accumulating within a certain consolidation period, it's time for a markup for that particular name. The other thing you'll notice is that it breaks above that 30, and then this particular day, the low is greater than that 30 mark. That tells you that on the day two, after the initial breakout with volume, price is still being supported on that particular day. And when price is supported after trying to break out, it's supported, and then there's a really good chance it's going to go up and out because someone's constantly, they bought on this day, but they're coming back the next day to buy on that day. So if that doesn't make sense, probably go back in the video, just play it back. But this is a really important concept where price is trying to break above level, right? And the moment or the day where it breaks above and the next day that is supported and there's continued buying to hold that price above that consolidation, this is something that you could take a note of. And this is something that happened in this area as well with a $20 mark where price came back in, held 20, rallied up, came back in, held, the 20 area, kept holding the 20s, and then rallied up to the 30. Now you flip the script. Now it's building resistance at 30, resistance at 30, breaks above that 30 on volume, then hold that 30 and rallies up and out to 40. So those are this particular would be really the first proper buy point if it wasn't through this area, right? Because we're coming out of tight corners. And that's really how I approach the market. This is where I could define my risk really, really well, right? Because it's coming out of a tight corner and there's a lot of volume to support it. And I get super, super bullish when I see the fact that on the day two, it's still being supported and someone's saying enough of this consolidation, it's time to mark this price up and go up and out. So that's how you interpret price and volume really well. And I feel this would be the other area where price is really tight. And then we're coming out of a tight corner, right? We come out of a tight corner and we rally up and out. And we're doing exactly the same thing where we're coming out of a tight corner, rally up and out. So
Yeah, so that 30 level is kind of the ceiling of a Darvis box. If you've read How I Made $2 Million in the Stock Market by Nicholas Darvis. And I also wanted to point out that during this breakout, we've got a little bit of an RS phase as the overall market is pulling back and just going sideways. Net is just clearly outperforming and breaking out to new all-time highs, the most bullish sign you can have. So yeah, I thought I'd add that.
right. So let's keep going. Basically, price rallies up and out. We get this whole rally followed by some emotion, right? Where we get slapped down, even though the market's not really that bad. It's in the trend. It's going through, I don't see anything concerning here. Like when price pulls back, volume seems to go down, right? These two particular days get fairly bad, and I do remember selling out of it on this particular day, and then the remaining on this day, because that reversal was on high volume and just doing a price volume, PV analysis. If you position through the 30 mark in this area, you've got about 13 points from this particular name, and it reverses back. Some traders try to see and hold on to see the reaction to the 50 and the 65. And I know Ross would have done that. But for me, given what my goal is, the reversal from 43.50 to 36 in 2 days is just not worth a headache for me. And especially if I see better opportunities in the market, I would just move my capital elsewhere and allow this to sort of let me back in after a consolidation. After these 2 days, it does a little, tries to rally, sees a failure at 40. I would have looked for something very similar to what it did at 30, like try 40, fail, try 40, fail. Maybe, go above 40, like go above 40, hold 40, and then up and out. Similar to what it did here. It went above 30, hold 30, and go up and out, right? Which is much easier to trade and have, again, we just want higher lows on the equity curve. It doesn't matter what it is. When the runs that you make are what, is basically you making the distance to the next low of your equity curve, or at least that's what the mindset should be. So when the stock is not performing for you, it's not performing. The goal is to make money, not to that's pretty much the mindset that I have. On this, but I do remember this area. At this point, the name basically fell out of wasn't on my radar. And I started picking it back up in this area, which is again, the same recipe where market's under pressure, RS is rising. So it's exhibiting RS days in this area. So every time we have an RS days, that's a bid, right? When you're strong in a weak market, you have a bid. You and I can't hold stock. What it's supposed to be doing in this is to continue going lower if it doesn't have a bid. It didn't do that. It went the opposite way, which is again a fairly basic concept of RS being applied in this and in this area, right? It's bucking the trend. Someone's accumulating stock, has come back in to accumulate stock. I do remember through this spot and this spot, I had eyes on earnings, so I didn't really get to position here. And then on this particular day is when I picked it really back up, given the fact that this day was really significant for net. And the reason being, again, is the highest volume, right? Highest volume since IPO. So that's a clear as day characteristic for you to watch. And leadership stocks that go from their IPO cycle to go up 400%, 500%, and really change the world or whatever they're doing in their own little space, they exhibit this characteristic over and over again. We saw it over here. We saw it right in this area, right? On this run up, on this run up, and now we're seeing it on this run up. So that's, I mean, I picked it up through, if I remember correctly, I had interest through the 50 mark. I might have traded, I don't exactly remember the trades I would have made in this area, but if it was going through 50 with volume on pace to be the highest, that is something that I'm working to get really good at. And then seeing how it consolidates up here, either above the 55 mark, how it positions, and I'll scroll to a right in a bit and we'll cover that. So picking up where we left off, this was basically a upgrade that moved the stock. It wasn't earnings. If I did say that, it's incorrect. So highest volume since IPO with a high closing range. Again, this is just a footprint by the institutions on the charts, and stocks that do continue in their cycle do exhibit this, and institutions basically use upgrades or reasons to accumulate stock as it goes, and they see potential in it. One of the things that I do see is the fact that right around here, it held the $1.50 mark. So that's someone again coming in and stepping in and saying enough's enough. Even though we rallied from 50 to 61 and we came back to 50, that's someone, you know, basically putting a floor in so that the stock can rally. Again, it gaps up, up, up. And I do remember it doesn't give you, I mean, if you bought it right around that 50, you have a good opportunity to hold it through earnings. But depending on the situation you're in, it gaps up on earnings and it basically fades on that day. At that point, what we call at TL is we need more evidence to act on a particular stock. We don't have the evidence that we need to be accumulating stock after such a wide range in a low closing range, right? So in this area, I do remember I stick to whole numbers, and you guys, if you've been watching the series, is it holds the 60 mark. And if it does that, I'm really interested in the stock. And then we get a, basically hold 50, run up into earnings, come back, consolidate above 60 area, tight above the 10-day, and it really goes up and out. There were a few RS days, but there's not really a typical setup, right, in this particular range that I see that could be, other than maybe you bought it through this really, super high level. Again, you get tested because this level is in the eyes of the market. We break up and then you get tested and then it rallies up and out. So it's perfectly normal to see up and down action, right? Right around a level of interest that everybody's basically watching in the market. So no typical, entry areas in this other, do you see anything, Richard, that I'm missing?
Yeah, the bar I pointed out, so first of all, the 2 days before the bar I'm pointing out, tight inside days, very tight action. And then I'm not sure if we have a gap down in the morning on the markets, but we have basically a gap down in nets and then a very strong recovery into the close. This is an oops reversal, recovering that range. So that oops reversal where it also holds 60 at the lows, that could have been an entry tactic. But yeah, I agree. There's no super clear pivot to manage risk against.
Right. So again, we this particular stock, I mean, given that the RS line is right near its highs and it's in that leading phase still, right? Me particularly, if this is on my watch list, I tend to find a way into it because my focus in the market is really leading stocks that are right near their highs, and they're sort of, bucking the trend on down days. If I see a RS day or two in this area, right, in this area, I'll try to define my risk and see if I could position versus the 10-day, but I'm always really involved in leading stocks. It just gives me the best opportunity to be in a move like this that's going from 70 to 88. So that's I don't see much in terms of consolidation sideways, tight action with low relative volume, and you get a good entry out of it. It's really the net was really up and down in this area, and then we enter the consolidation or the base, the real base, right? When growth started struggling back in Feb of 2021. So there are a few things to consider within bases. One thing I do look at is the volume anchor within a base. I always define where my volume anchors are. And that concept in and of itself is basically you take the first down week and now you're in a base, right? So you're looking for clues as to where institutions are stepping up. So I look for that within a particular base, and this is your clear volume anchor at this point. What I tend to do is I set alerts right around that $1.80 area. So this day on big volume, you get right around the $1.80 area. And what you'll notice when you study enough bases in the markets is one, that the base depth is always of interest, and this was less than this was about it wasn't less than 35, about 36% base depth, which is less than your 40% mark. This is a very typical base depth for a sales driven name. I don't want to call it a growth stock because the Ken Slim folks will go crazy, but this is just a sales driven name, which is what the software space has been doing for about 7 years now. So it doesn't fit all the Ken Slim specs, but that's just how things are in the software space these days. Things are sales driven. So this is your volume anchor. Just getting back to the point, this is your volume anchor. This is a level of interest that's going to be within this base, right, within this larger base, which was formed with a top of 95 and a bottom of right around 60, base depth of about 36%. We get institutions saying or sort of positioning on this particular day. So I will set an alert here every time this stock moves up. It's of interest to me because it could be a potential right side setup going up the right side, which became really clear right in this space. So many of us, and we try to emphasize this, is we see a launch pad forming, right? Launch pads are basically KMAs bunching up, creating potential that on a 10 to 65 day basis, 10 to 65 day basis, price is basically consolidated, right? And when those things come together, what we get is potential being built so that it could potentially rally, and we call that a launch pad. The other thing in this area that was really, really good was the fact that it started exhibiting RS days, even on down days in the market, right? So we see a rising RS line. So RS line's rising, Launchpad, which is a characteristic to look for, right? We have a volume anchor right around 80. So $1.80 volume anchor right there. Now you have now you have a recipe for success, right? The other thing in this area was the fact that volume dried up and nobody really wanted to sell stock right above that 80 area. So if you go back and you take a look at the lows of these days, the price is being controlled above that 80. And this was really when I started looking at this stock, and I bought through with an average of 80 to 30. If I could pull, you want me to pull that up?
Yeah, go for it.
Okay. So I positioned in two ways on this particular stock. One was the fact that I was building conviction in this area, where we see a dry up in volume, and we talked about the 1, 2, 3, right? The RS, Launchpad, respect for 80, things coming up the right side, the volume anchor being this area, and it's consolidating right around the volume anchor. If you go study volume anchors within bases and the anatomy of bases, you'll notice that once the anchor is set, price will always come back right before its run up and will consolidate right around the close of that volume anchor. That's a study you could do on your own. So 83.40, I basically, went through the high of that particular consolidation. It was on increasing volume, if I'm not mistaken, on that particular day. At the very least, you want increasing volume within the base. That's a whole other topic to be discussing. And then you get a really good rally up and out where with about, three things lining up at once, you can have really high conviction, right? You want to make your buys with high conviction. If you study those three things that I just listed, RS days, launch pads, and volume anchors, your conviction at this point is really high, and you could get your position sizes really high so that your equity curve can see a spike when the price of the stock spikes. So the other one is the very traditional entry area on this, right, which is your 95.77. Again, we see some sort of turbulence in that range. Perfectly normal to see it because this is in the eyes of the market. We see some sort of turbulence even in this area, right? Right in this area, we see a little up and down because this is in the eyes of the market because it's an intermediate pivot within this larger base structure. So at this point, this is really the early entry. You have the ingredients that you need. I know some folks even positioning through as it comes up above that 21 day. That's another way to go about it. And that's pretty much how I approached the trade on this. This was really a high conviction trade because lots of things lined up for me to take a position in it and sort of hold it through. I guess the last bit is how do we manage a position after we get into it at this area, maybe at this area, maybe even at this area, right? Because it doesn't really trouble you that much right around that 95.77. So the way I manage it is 2 closes. So 2 closes below KMAs. The fact that I'm up 44% or 45% on this name, I will allow it to dance around the 21.23. I've been really watching this 50-day, and that's just how I go about it. I've been watching this 50-day rise above the 100. I'm okay with it coming back in to test the 50-day, but the ideal scenario and what it's been doing is it's been holding that 115 mark. And the market's just going through it's summer stuff, and we get really low volume on this as it retraces back in. So I'm basically watching that 115 mark for starters. I did try to buy puts, but they decayed actually today, the day of recording, for pretty much a scratch, 100% loss on those puts. So they didn't really do anything for me. But when I'm trying to hold a larger trend, I will likely anticipate weakness. And I have a whole system for that doesn't always work. But I have been anticipating weakness, but it's been super, super strong above that 115 mark. So I'm waiting. So at some point, we'll get a test of the rising 50-day. At that point, I have to make a decision on, do I want to add stock that I sold into strength, right? Mm-hmm. Or depending on the nature of that reversal, how sharp it is. If it's a single day slice 50, slice 65, I'll get out because the trade's done for me at that point. But if it's very logical and sort of retraces very slowly, we see logical action, maybe even an undercut rally, I will add whatever I sold, and then we'll see if I could get another trend out of it.
Perfect. I think that pretty much covers it. Do you want to do basically scale out to the full run of this stock and just kind of give a brief overview of all the things we covered in this video?
Yeah. So how do you get it on your radar? 35 million. Not every IPO gets that. If you didn't get it at this spot, at least on your watch list, first step is to get it on your watch list, get it on your radar. Then this is the area it will bug you again with the highest volume since IPO day, right in this area. And then if it didn't bug you there, the market's collapsing. It's one of the best stocks that's bucking the trend, right? So it should bug you through RS, should bug you through the IPO scans if you have them here, should bug you here if you have a volume scan, right? There are many ways leaders will make sure you notice them. So it's all only up to us. We discussed this entry area through a dry up and we see increased volume and we go up and out, right? The other thing we haven't discussed in this video is the tendency for it to rally for 3 to 4 days. Tendency for it to rally for 3 to 4 days. Stocks have a habit, they develop a habit and they show a habit repeatedly as they go up the right sides. And this is exactly what net did. So as we continued, we basically get a clean break of 30, we hold 30, we discussed that briefly. We break down here. Basically, if you had stock in this area and you scaled it into strength, you really got pushed out on these particular days being big red days. So that would be a sign of caution. We moved right up the right side, almost like an ants pattern, right? 13 out of 14 days up. I forget the exact rule, but that could be applied in this area, but we get a gap up on a upgrade, not earnings. At this point, with the characteristic of highest volumes since IPO, once again, a leader is bugging you and saying that this is where you want to be. Price comes back in to the 50 mark, it holds, rallies, we get earnings. Really the meat of it was this recent action where we get a run up and out, right? No traditional entry areas right around all of this run. So you really have to keep the stock on your radar, given the fact that the RS line is leading and is really outperforming in the market. So you need different tactics other than the pure consolidation textbook type of stuff. The base depth is important. Less than 40-45% is always a positive. And then we get the volume anchor. Price consolidates around the volume anchor, shows RS, and shows a dry up right before it runs up in price. We run up in price and you get a good trade because you had a bunch of things going for it at once. The way we exit is to basically wait for 2 closes below a KMA, depending on the level of cushion that you have. If you position around 95 area, you're probably up about 35% right now. Whereas if you position around the 80 area, you're up about 45 to 50%, which is a different story. So depending on your average cost, you have to manage it accordingly. See what the rising 50 days doing. At some point, we're going to get that test, how it comes back in, the angle of descent, how the plane's landing. If it's nosediving, it's not the best. If it's, very logical in its ways with, a dry up in volume, that's a different story. At that point, you could think about different scenarios if you want to add to the stock on that 50-day, or if it exhibits strength in the wick on Monday, do you want to buy up through 120? So plan for all those. That's basically how I go about managing it.
Perfect. We'll leave it there. Thank you guys all for watching. If you want to see other videos, other analysis videos, for instance, Livongo, which also showed relative strength back near the March 2020 correction, go ahead and check that out. The link will be down below in the description. Or we also cover some recent stocks, AMD, Upstart, which also are great study videos as well. So thank you guys for watching. If you enjoyed, go ahead and leave a like down below and subscribe if you're new. I will see you guys in future videos. Thanks.